Today, guys, is a video that's been long overdue. I'm gonna show you how to live off of your Bitcoin without ever selling a single Satoshi. Sounds crazy, right? But it's not. In fact, I've been doing this for years. I even bought my own house in Thailand this way. And the best part, I didn't have to sell my Bitcoin at all. I simply borrowed against it. In this video, I'll break down exactly how I did it, the risks that you need to know about, because there's a right way and a very, very wrong way to do this, and how you can use your Bitcoin to improve your life while still keeping all of its upside. So guys, stick with me because this is your blueprint to living off of Bitcoin without ever selling a single Satoshi. But before we dig into this strategy, I know some of you watching this might not even own Bitcoin yet at all. Maybe you're all in on altcoins. Maybe you're just crypto curious and still doing your research before you pull that trigger. Before we go any further, you need to understand one thing: why Bitcoin? And it's simple. I won't drag this on for too long here, but we live in a world where the financial system is rigged. Debt is baked into the game. Fiat currencies are designed to decay in value over time. The truth is, the value of your dollars, your euros, your yen, or any fiat, it has no floor. This image right here, guys, says it all. Our generations have been trapped in a cycle created by central banks and governments. Print, inflate, devalue, repeat. Wages can't keep up with inflation. So why would you store your wealth in something designed to lose purchasing power? Most people do, but the rich don't. Michael Saylor said it best.
People that use fiat currency as a store of value, there's a name for them. We call them poor. Okay. Anybody that's rich in the world, they own property.
And Saylor's right. You should measure your wealth in things other than fiat: art, collectibles, gold, real estate, and of course, Bitcoin. But when Saylor talks about property, he's not talking about a mansion in Florida or an apartment in New York. For him, Bitcoin is the ultimate property.
Bitcoin is digital property. If you think of it as gold or cheese, nobody rents their cheese or mortgages their cheese. But when you think of it as owning 100 acres in Manhattan, if your family owned 100 acres of Manhattan 100 years ago and you owned it this year, and I asked you, what's your family doing with it? You know, how are you going to pay your bills? You wouldn't say, well, we're going to sell our property in Manhattan. You would say, we're going to rent it, we're going to develop a building on it, or we're going to borrow against it, we're going to finance it. And so you would generate billions and billions of dollars off of 100 acres of real estate in Manhattan without ever selling it. It's property. And so Bitcoin as property means you will be able to rent it, finance it, or build businesses on top of it in the cyber economy. That would be worth $10 trillion to the United States in 2045 each year.
Now, guys like Saylor, their goal isn't to borrow against their Bitcoin. What he does is borrow in any way that he can: loans, selling shares, raising capital, and then he deploys all of that into Bitcoin. It sounds risky, right? Imagine mortgaging your house to buy Bitcoin. That's a scary thought. And to be clear, I'm not here telling you to do that. But he has the confidence to make that move for one reason. He knows that with a long enough time horizon, Bitcoin keeps going up, and everything else, when priced in Bitcoin, keeps going down. The reason is simple: scarcity, hard-coded. Every 4 years, the halving cuts new supply of Bitcoin in half. First, it was 50 per block, and then 25, then 12.5, then 6.25, and now just 3.125 Bitcoin every 10 minutes created. Each halving tightens the supply shock, making every coin harder to get. Now, layer in the demand. Wall Street's pouring in. ETF flows are now eating more Bitcoin than miners can even create. Public treasury companies are buying Bitcoin even more than the ETFs. Nations are also stacking. Sovereign funds are building reserves. When the most powerful capital on earth is buying every dip, you have to ask yourself, what do they see that others don't? While fiat melts and even real estate struggles to keep up, Bitcoin keeps outpacing everything. It's the scarcest property in the world. And in the future, every country, every institution, every millionaire, and every average Joe, like you or me, will need their Bitcoin passport to make it in the new economy. That's why the playbook I'm about to share with you exists. And I'd only ever deploy this strategy with Bitcoin, no other altcoin, because it's the only crypto asset that I have complete confidence will still be here decades from now. Trust me, I know you probably have your favorite altcoin or new project, and guys, I do too. But after surviving every cycle since the very start, Yeah, I've been here since 2012. I've seen projects come and go, but Bitcoin is the one that always remains. Sure, it'll have ups and downs, but if you zoom out, Bitcoin's long-term trend is a constant climb, soaking up value from inflated currencies like a sponge, or we can also say like an orange black hole. And that brings us to something most people never learn until it's too late. A principle the wealthy have quietly used for centuries. And guys, here's the big takeaway. I want you to remember, wealth that lasts is never built by selling the core. The Rockefellers didn't sell New York. They borrowed against it and built an empire that outlived them. The British Crown didn't sell its estates. They leased, developed, and borrowed against them, keeping the land and the family for centuries. Oil dynasties didn't sell their wells. They used those reserves to secure capital for new drilling, pipelines, and refineries, turning today's oil into tomorrow's fortune. The playbook has always been the same. Borrow against the golden goose, never touch the principal, and let the next generation inherit the upside. Bitcoin is the first asset that lets anyone run the same game. You don't have to be born rich. You just have to understand one rule. Don't sell what cannot be replaced. And if you expect Bitcoin to be around for decades from now, like I do, here's something to think about. Today, less than 3% of the world's population owns Bitcoin. And yet, it's already a multi-trillion-dollar asset class. Every year, more institutions, nations, and everyday people are adding it to their balance sheets. So ask yourself, wouldn't you try to accumulate as much Bitcoin as humanly possible right now? Would you really want to sell it to buy a car or a house, knowing that in a few years you could buy the same thing for half or less in Bitcoin terms? And here's the best part. What if you could buy what you needed without selling your Bitcoin and still keep all of that upside? This is also the key to retiring on Bitcoin. The old model says you save your whole life, then spend it down to zero and hope it lasts. That's not the game we're playing. The new model is about stacking Bitcoin for years, never selling, and then borrowing a small, safe percentage each year to cover living expenses. Done right, your stack keeps growing in value while you pull cash flow from it. Enough to fund your lifestyle for decades without ever shrinking your core. It's how you can retire and still pass on the full asset to your kids, who can then pass it on to theirs. Your Bitcoin becomes a retirement fund and a family trust all in one. Now, YouTube has been pretty picky about my content lately, so I need to say that whatever you do this with a tax advisor, as I am not a tax advisor or a retirement planner. This is just what I do with my own personal finance. Think about it this way, guys. Bitcoin right now has been ranging from like 116,000 to 123, right? But if you fast forward to 10 to 15 years and Bitcoin reaches $10 million per coin, that kind of growth changes everything. Your Bitcoin becomes a retirement fund you can tap into year after year while the core keeps growing. Here's an example. Let's say you own just 0.25 Bitcoin today, worth about $30,000, right? At today's price, borrowing 10% against it gives you $3,000. That's useful, but not enough to retire on. But if Bitcoin hits $10 million, that same stack would be worth $2.5 million. Now borrowing 10% against it each year would give you $250,000, enough to cover a comfortable lifestyle, fund your passions, or support your family, all without ever selling a single Satoshi. Okay, so the question is, if you're going to borrow that much every year, how are you going to pay back that $250,000 loan? Well, if Bitcoin continues to appreciate like it has historically, averaging over 60% annually since inception, your stack's increased value alone could cover the repayment. Now, we can't expect Bitcoin to continue growing at the same pace, but even if that growth slows to just 20% a year or less each year in the future, once Bitcoin is worth $1 million per coin, that appreciation still represents massive dollar gains. In other words, Bitcoin's rising value over time doesn't just grow your borrowing power, it can also service the debt, keeping your core position intact. The point is, the longer you hold, the more your borrowing power grows, and the more realistic it becomes to achieve your true financial freedom with Bitcoin. Okay, guys, now I'm going to tell you exactly what I did when I bought my house in Thailand in December 2022. And at the time, the villa that I bought was around 1.2 million US dollars. So spending 1.2 million that way would have required 72.5 Bitcoin. If I had sold my Bitcoin, it would be gone, but I borrowed against it instead. I kept those coins, and fast forward to today, That same 72.5 Bitcoin is now worth roughly $8.5 million. Meanwhile, the villa I bought is worth $2 million. So by borrowing, I didn't just keep my Bitcoin. Its value has far outpaced the property gain. The bottom line is that I bought the villa for less in Bitcoin terms, retained the Bitcoin upside, and ended up sitting on property and crypto that together are worth much more. If I had sold the Bitcoin, I'd only have the villa worth $2 million today. Instead, I have the $2 million villa and Bitcoin that's gone from $1.2 million to worth over $8 million. Crazy, right? What if I had sold back then? I lose out on millions, but by borrowing, I ride the wave both on the property and crypto. That's how powerful this is. Before you get too excited about trying this out, there are a few things that you need to understand because I just made it sound way simpler than it actually is. First, let's kill the biggest myth. This is not some magic passive income trick. All real wealth systems require management, timing, and discipline. Here's how borrowing against Bitcoin works in plain English. You post your Bitcoin as collateral to a lender. Think of it like putting down a security deposit. This can be done in decentralized ways using platforms like AAVE or Morpho, or in more traditional finance styles through companies like Jack Mallers' Strike, or even our channel partner Xapo, where you can borrow against your Bitcoin and spend it directly on their debit card. It's super easy to use. I'll walk you through those later. The lender will typically let you borrow between 10 and 50% of your collateral's value. That ratio is called your loan to value or your LTV. Remember that term. If Bitcoin's price drops, your LTV rises. That's the dangerous part. If it rises too much, the lender will automatically sell some of your Bitcoin to bring it back down. That forced sale is called a liquidation. On the flip side, if Bitcoin's price goes up, your LTV goes down, which gives you the option to borrow more. Use the gains to pay down your loan or simply enjoy the lower risk. So let's make sure the terms are all clearly understood. Collateral means the Bitcoin you posted to secure your loan. LTV is your borrowed amount divided by the current value of your collateral, loan to value. Liquidation is when the lender sells some or all of your Bitcoin to reduce your LTV after a price drop. And your buffer means how much Bitcoin's price can drop before you're in danger of liquidation. Let's run two quick examples so this is crystal clear. So guys, in this example, we're just going to pretend that Bitcoin is $10,000, the price of Bitcoin right now, to make this example easy. Example 1, the safe play. You post $10,000 in Bitcoin as collateral, and you borrow $2,000. That's a 20% LTV. If Bitcoin's value drops by 50%, now you have $5,000 in collateral. Your LTV rises to 40%. A 50% drop in Bitcoin has happened in every cycle so far. But in this scenario, you'd still be relatively safe. Okay, so example number 2, the aggressive play. You're saying $10,000, let's say one Bitcoin, right? But you borrow $5,000. So that's a 50% LTV. If Bitcoin drops by just 30% to $7,000, your LTV jumps to 70%. Just a little more downside and you're flirting with liquidation. On platforms like AAVE or Morpho, liquidation usually kicks in somewhere between 75 to 85% in your LTV. That's where you lose part of your Bitcoin for good. The golden rule is never use your whole stack as collateral. Only post a little bit. Keep the rest in cold storage. This is your insurance, your protection against market chaos, flash crashes, or a platform meltdown, and avoid borrowing too much in general. When I interviewed Jack Mallers, he told me that he typically borrows around 10% against Bitcoin that he posts as collateral. That's super conservative, but it's what allows him to sleep comfortably at night. Now that you understand the mechanics, let's talk about timing, because this is where most people blow themselves up. The biggest mistake, borrowing at the wrong time. If you borrow against your Bitcoin after it's gone on a huge parabolic run, near the top of the cycle, you guys are asking for trouble. What goes up can and will come down. And as the price falls, your LTV rises. That's how people get liquidated. So here's the trick, guys. The safest time to borrow is when everyone else is scared. After deep corrections, during nasty bear markets, and as a general rule. When Bitcoin is at near or below its 200-week moving average, you never want to be borrowing at all-time highs. Never borrow in the middle of peak euphoria or a FOMO frenzy. How do you spot a safer window? Look for panic, not excitement. If the general mood is fear, apathy, or boredom, when people have stopped talking about Bitcoin altogether, that's often a safer time. That's when I've done it myself. After Bitcoin crashed, when it was quiet and nobody cared anymore, right? I did it right at FTX when everyone said Bitcoin and crypto was dead. And I wanted to get a house and I didn't want to sell my Bitcoin. Thank God I didn't, right? And that was a perfect time. Now, will future cycles look exactly like the past? Maybe not. Some believe the 4-year cycle is over. Some think that ETFs, institutions, and even governments in the mix, Bitcoin might not see these brutal 80% crashes anymore. But here's what history tells us. During the 2011 crash, Bitcoin came down 94% from its all-time highs. In the 2014 to 2015 crash, negative 82%. The 2018 crash, 85%. And during the last cycle, during 2022, 2023, a 77% correction. And just like Bitcoin's percentage gains have diminished over time as the asset matures, so have the percentage losses. That's why I always say that there are diminishing returns and diminishing losses. I'm not saying for sure we'll see another 70% drawdown, but I always prepare for the possibility. If Bitcoin has already dropped 30 to 50% from its highs, taking a loan out at that stage is much safer than doing it near the peak. Next up, guys, you'll need to choose where you take your loan from. If you're not comfortable with DeFi platforms like AAVE, you can use institutional grade options like Coinbase, Strike, or Xapo. They're regulated, they're insured, and they provide transparent proof of reserves. Here's the big takeaway. Just like leverage or any other financial tool, you need to learn how to use this properly before jumping in. Yes, your Bitcoin is at risk if you play recklessly, but when used with discipline, borrowing can improve your life, fund your living costs, or even invest in a business that lets you create enough cash to pay down your loan. All right, now let's go through this step by step so it's crystal clear. Step 1, guys, accumulate and defend. Your Bitcoin stack is your vault, your legacy. Don't risk the vault. You defend it. I'm constantly buying Bitcoin, and most of it I will never touch. That's been my approach since 2012, and it's the same mindset I want you to have. Don't rush to throw it into loans, guys. First, build a solid base in cold storage that's untouchable. Step 2, collateralize the right way when you're ready to borrow. Only post 5 to 20% of your stack as collateral. That way, if the market nukes and you get liquidated, you've only ever risked a sliver of your holdings, not your whole financial future. Step 3, size the loan. Understanding your LTV, your loan to value ratio, is simply the loan amount divided by the current collateral value. Your survival zone is 10 to 20% LTV. That's a sweet spot where you can weather any major drop without losing your collateral. Here's why it matters. If Bitcoin drops 50%, your LTV doubles. So if you start at 10%, you're still totally safe at 20%. If you start at 40% though, you're toast if Bitcoin drops that 50, 60, 70%. Then you get into liquidation territory and boom, they start selling off your Bitcoin. Step 4, guys. Borrow only for real needs. This is where people blow it. Borrowing to buy a Lambo, designer clothes, or gambling on meme coins. That's how you wreck your stack. Instead, borrow for covering living expenses when needed, funding a business or expanding one, handling real emergencies like medical bills, for example. The wealthiest families in history didn't liquidate their core. They used it as their personal bank. That's how you should think about it. Step 5, manage and repay like a pro. Treat loans as a temporary bridge, not a lifestyle. Have a repayment plan before you borrow. Check your LTV monthly and stress test your scenarios. For example, like what happens if Bitcoin drops 50% overnight? Am I still going to be safe? And here's your emergency lever as well. If you've only posted 5 to 20% of your Bitcoin as collateral, that means you still have 80 to 95% untouched. In a crunch, you could move some of that untouched Bitcoin into your loan to add to collateral in the case prices are going down. The more collateral that you have, the lower your LTV becomes and the less risk that you have. So I've had to do this in a few situations before, and I suggest starting out small so you get the hang of it, right? Because guys, I'll tell you, I had the absolute worst thing happen to me on COVID crash, right? I lost hundreds of Bitcoin it was horrible. And this was just me being irresponsible, not knowing, and this is why I'm telling you that you can learn from my mistakes. And it's worth tens of millions today that I lost from having too much debt during a totally unexpected black swan. And it was just this close. I mean, we're talking like dollars. No one else to blame but myself, but I wanted to blame everyone else at the time. So It's really, really important that you guys do this responsibly. And the craziest thing is if I had known better, if I was more experienced, I could have, or if I had a bit more time, I could have just put some more Bitcoin that I had as more collateral as that price started to go down, right? That also becomes dangerous too, because if you put more Bitcoin in as more collateral and the price continues to go down, you still can lose all that, right? And so it's a slippery slope when you do that. But these are different levers and tools that you can use. This is why it's really comfortable to get familiar with this process before going quite heavily into it. All right, now let's actually dig into the lending platform I've personally used for years, AAVE. If you've never used it before, here's the quick overview. AAVE is a decentralized lending protocol, meaning that there's no bank, no middlemen, and no one holding onto your Bitcoin or any other assets. Everything happens on-chain in real time in smart contracts you can verify yourself. Okay, guys, now I'm just gonna show you a little bit about how easy it is to use AAVE. This is what I use AAVE all the time. I created a new wallet and a brand new account. All you do is go up over here, connect your wallet, and you're good to go. AAVE has different instances here. So you can use, this is the Ethereum one. You've got coin, you can use Base, Arbitrum, Avalanche, whatever. And when V4 of AAVE launches, they'll allow you to do all of these collateral in any and all chains at once. Right now, you have to pick which one you're at. So I use the Ethereum one. And so we're going to use Ethereum one, Ethereum Core, right? And so now on this side, you see the assets I have to supply. And if you want to, another way you can use AAVE is you can just earn passive yield on your assets. So if I supply to the lending pool wrapped ETH, I can get 2% a year on that. If I supply Ethereum, I can get 2% a year. If I supply wrapped Bitcoin, I get basically nothing. But another thing that's important to note, guys, is that this is an Ethereum network. It's not the Bitcoin network. So in the centralized versions, like Jack Mallers' Strike, for example, or Xapo or whatever, you can actually post native Bitcoin as your collateral. But remember, in those centralized ones, you actually give up the keys to your crypto. And this one you don't. But the sacrifice you make on this one right now is that I can't put native Bitcoin in there. I have to put wrapped Bitcoin or Coinbase wrapped Bitcoin. And so the way that you can do that, if you have Bitcoin already, is you go to a centralized exchange and you swap out your Bitcoin for wrapped Bitcoin, and then you have to send it to your wallet, and then you can use it here. So here, what I'm gonna do is I'm gonna supply my Bitcoin, right? My wrapped Bitcoin. It's 1 for 1. 1 wrapped Bitcoin equals 1 Bitcoin, right? So I'm gonna supply it. It's worth about $1.1 thousand, as you can see here. Approve the wrapped Bitcoin. The first time I did it was just to approve the spending limit. I have to go in there again and supply wrapped Bitcoin. I prove it on the pop-up asking me, and now I'm supplying my wrapped Bitcoin. Okay, there you go. Now you usually want to add this to your wallet so you can see it in your wallet. AAVE gives you a receipt. It's a AAVE ETH chain wrapped Bitcoin, right? And so add it to my wallet so that I can see it in my wallet. And you can go, okay, and close this. And now you can see my supplies, right? So my net worth here, because I haven't borrowed anything, is $1.1 thousand. Okay, so now guys, what I have to do to take a loan is I just go over here and you can see these are all the assets I can borrow. I can borrow Ethereum, stablecoin, USDC, USDT. For the purpose of this video, we're just talking about borrowing money for what you need, like I did to buy a house, for example, or if you need to for medical bills, whatever. This is a variable rate, right? So it changes based on demand, but right now it costs about 6 to 6.5% to loan either USDC or USDT. So let's just borrow USDT. So AAVE has what's called a health factor. This is like an easier way for you to understand loan to value. But if I were to do this, I have $1.1 thousand. I could borrow up to $791, but I don't want to do that because that's way too risky, right? We talked about your LTV being at, 20, 30% or something like that, right? So I have $1,000 in there. Let's say I borrow 200. Now it says it's very safe. It's in green, right? So let's just go a little bit more. Let's borrow $300. Now it goes orange, right? It tells me it's a little bit more risky to do that, but it's still pretty good. I can still survive a pretty dramatic, but let's just borrow $300, see what happens. Okay, there we go. And that's how easy it is to take a loan on AAVE. That's it. Now I've got 300 USDT I just borrowed from the Bank of AAVE. You can see up here, my borrows. So I'm borrowing $300. I'm paying on this $300 annually 6.67% interest, but I've also supplied a little bit. So my net APY is actually a bit lower with the kind of yield I'm generating from this Bitcoin. But you can see if I go over here and look at risk details, it tells me my LTV is 27.39. It says it's pretty safe, right? And we talked about earlier in the video that that number is pretty safe. Even if Bitcoin dropped by 50%, this would double, right? This would double to 54, 55% LTV. And you can see here, liquidation is at 78%. And guys, that's it. So that $300 is now in my wallet and I can spend it however I want. And on AAVE, there's no timeline. I can pay this back in 1 year, 6 months, 3 months, 10 years. It doesn't matter. And that's it. That's how simple it is to use AAVE. Now, I will tell you guys that I'm going to make another show that shows a far different way to use AAVE. It's much more aggressive. It's much more risky. And it's another strategy that I use, completely different type of strategy, but it's a strategy that I use to use a little bit of leverage going from bear markets to bull markets, and my plan to pay it back using the gains from altcoins and how that helps me accumulate more Bitcoin and Ethereum, but mostly Bitcoin. So guys, make sure to subscribe to the channel because in a future video, and not too long, I will make a video about that. And it's definitely for the more risk takers out there, but it's something that I use and I've learned how to use it pretty effectively as well. The next 5 years is going to be a turning point for anyone holding Bitcoin. Right now, borrowing against your stack still takes some homework. You've got platforms to choose from. You have to manage your LTV and watch the market. But that's about to get a whole lot easier. With the way things are headed and how America's turning pro-crypto with new regulations popping up each week, it'll be no time before we can use Bitcoin as collateral and harness institutional grade lending products. If you guys want to, I will probably always use the DeFi version, but that's me. A lot of you watching this are going to feel more comfortable using the centralized versions. But you'll get the same low rates, fully regulated borrowing tools, and the ultra wealthy have already used these tools for generations. So picture this, your stack sitting in a vault, untouched, still compounding year after year. You tap it when you need it, funding your life, your business, or your dreams, without ever selling a single Satoshi. Then one day, you pass that stack on. Your kids do the same. Their kids do the same. Nobody in your family ever has to step off the rocket. That's the end game of the strategy. More tools are coming and the foundation is being built right now. And if you can master this discipline today, you'll be ready to step right into that future. Remember guys, borrowing against your Bitcoin, if done wisely, means that you'll never sell your core asset and you'll maintain your property that historically has gone up each year on average by roughly 50 to 60%. It will unlock the cash you need to cover living costs, grow a business, or seize opportunities without ever letting go of your Bitcoin. You'll get to build generational wealth that your kids, grandkids, and great-grandkids can live from without ever breaking the chain. So guys, repeat this mantra after me. Say it out loud. Stack. Wait. Borrow small. Repeat. Never risk the golden goose. That's how survivors win. Not just for now, but for generations to come. If you're in a position where you don't need to borrow against your Bitcoin right now, even better. Keep stacking, keep your cold storage growing. The bigger your stack, when the time is right, the more options you'll have to change your life without ever touching the core. The truth is, not everyone will use this strategy today, but every Bitcoiner should understand it because one day, the right opportunity will appear. Maybe it's starting a business. Maybe it's buying your dream home. Maybe it's buying yourself time to focus on what matters most. And when that moment comes, you'll know exactly how to do it without stepping off the rocket. Bitcoin is a long game. The further out you zoom, the better it looks. Every halving makes it scarcer. Every cycle brings more adoption. Every year you hold, the stronger your position gets. So whatever stage you're at, whether you're just stacking your first sats or sitting on a decade cold storage, stay focused, stay patient, and keep your eyes on the horizon because the real prize isn't the next pump. It's the freedom and security that come from holding the best store of wealth this planet has ever seen. I hope that you guys got value from today's video. If you did, I'd really appreciate it if you gave it a like, share it with someone who needs to understand the value of Bitcoin, and hit that subscribe button, guys, if you're not already. My name is Chasse. I've been in the space in Bitcoin since 2012. I've launched Bitcoin's first lottery in 2013. I ran a Bitcoin-only resort in 2018. I built a venture capital firm that deployed over $100 million and backed over 250 startups. I'm also the founder of 2 crypto projects designed to give everyday people the same advantage that insiders have. I've been preaching Bitcoin and altcoins since the early days, and I'll keep working to make sure you're always ahead of the curve. If you're new here, welcome to the channel. And remember, guys, stay sharp, stack your Satoshis. I'll catch you in the next one. See ya.